To Marguerite here and Elerina for joining me. As Kevin said, Marguerite is the CFO with Kerry and Elerina has the lucky title of Group Head of Sustainability Reporting. So we will have time for questions hopefully at the end. We do have quite a bit to cover though, so feel free to enter your questions in Slido as we're talking, or we'll have the roving mics, as Kevin said, also in the room. So Marguerite, maybe do you want to begin by providing us with an overview of Kerry and the business focus and strategy?
Sure, and good morning everybody. Hopefully you got a short sense of Kerry in the opening clip. I know that many people are probably very familiar with Kerry and our heritage going back over 50 years in the dairy industry. Probably what a number of people won't be as familiar with is the evolution of the business over the last 10, 20, 30 years. And as we look at the business today, we're a truly global taste and nutrition company. You're probably more familiar in Ireland with maybe some of the smaller part of our business where you would see some of the dairy-based products on the supermarket shelves. When you look at the vast majority of our business, it's really a B2B business, and it's truly global, as I've said, spread across North America, Latam, Brazil, Mexico, Qatar, in Asia, in the Middle East, and obviously in Europe as well. And sometimes it can be hard to maybe explain a B2B business. And often we draw the analogy that we're the Intel inside food. So if you had a beverage this morning, or if you had a meal over the weekend, or if you or one of your family had a low alcohol beverage, a botanical, herbal, gin, etc., it's more than likely that there was a Kerry ingredient or a Kerry product. And when we look at our strategy from an overall perspective, our aim is to impact 2 billion consumers by 2030 with the products that we supply. And it's over about 1.25 billion at the end of 2023. The theme of today's conference is, as Kevin outlined, and also the whole theme of sustainability is really core and centre to Kerry. And I would say that is in two ways. Firstly, sustainable nutrition, and secondly, the impact that we make as an organisation. I think post-pandemic, I think all of us as consumers have become much more conscious of the food that we eat and the role that nutrition plays in our lives. And the reason why it's so important in the context of sustainability is when one looks at the food industry contributes over approximately 10% of greenhouse gases. It is said in certain reports that the food industry has a greater impact than the global aviation industry. And food waste is one of the most significant contributors. Within Kerry, and I'm sure we'll come to this later through the discussion, we have significant technology to address food waste and to work with our customers globally to address food waste, creating solutions with our scientists to extend food preservation, minimise food waste and minimise the impact from a sustainability perspective. And that's really important. I think the other area from a sustainable nutrition and what it means to us, it means a couple of things. Firstly, I would call out improving the nutritional profile of what we consume. So lowering the sugar, lowering the salt, lowering the fat content of the food that we consume. The World Health Organization estimates that most consumers consume twice as much salt as we should in our everyday life. So that's a really important contribution. Importantly, as we improve the nutritional profile, it's also doing that in a way that we either improve or we don't impact the taste. And thirdly, which is increasingly important to our customers and to us, it's improving the environmental impact of the food that we consume. And obviously doing that in a way that's at the right value point for consumers to purchase, and that it's convenient. Maybe the one or two comments I would make just in the context of the scale that you asked. Last year we were an 8 billion revenue organisation. We have operations, manufacturing operations in over 137 countries, and we have a team of about 22,000 people listed on both the Dublin Euronext and also due listed in London. So hopefully that gives you a scale. I think the important point for us is that sustainability is a real core part of our strategy, and it's a key growth driver. And so therefore for us, and I think this will come through during the course of this morning, the way we think about sustainability, it's integrated into the business. It's not just adjacent, and then also in relation to our own environmental footprint.
Great, thank you very much. So I suppose with this year, with the CSRD reporting coming in, and the big, I suppose, sustainability focus that we have in relation to that, given, I suppose, the audience here is audit committees or people who are dealing with audit committees, can you talk to us a little bit about the governance of that reporting structure and how it might differ from your financial reporting, if it does?
Yeah, I think, and Elerina, maybe I'll bring you in here as well for your observations. From a governance perspective, I think firstly, and I think we probably have a number of people in this room that would agree, governance is really important in the context of whether it be financial reporting, CSRD reporting, or execution of the strategy. In the context of governance, what we have found has been most impactful and really important, and it's not new, is really about getting the tone at the top right. And when we make that reference, it's about being clear from a governance perspective, from a board level, but also from an executive perspective. I would say, look, the new regulations have presented some challenges. It's a new area. We're all learning, and it's certainly evolving. We've been very thoughtful around our board structure. If I go back, a number of years ago, back in 2020, in our sustainability strategy before CSRD, but there have been precursors, whether that be GRI reporting or other regulations. Sustainability was part of our governance and nomination committee. We did have a lot of, I think, open and good debate within the board and within the executive team, just given the volume of reporting, the fact that the regulation around CSRD is new, whether the topic was just too broad to incorporate into our existing governance and nomination committee. So we did establish a standalone sustainability committee in early 2023. And we were very thoughtful about the roles and responsibilities of the Sustainability Committee and making sure that they were distinct from the Audit Committee. And ultimately, the board delegates the authority to the Sustainability Committee and to the Audit Committee. In informing the decisions we made, we took input from various firms, from peers, and just developments globally. And the way we have divided or segregated the responsibilities between the two committees, we effectively, in the Sustainability Committee is responsible for the oversight of the execution of the strategy. And also for the oversight of the sustainability strategy, and also the oversight of performance. And from an audit committee perspective, it's not black and white. There's some overlap, but we're clear as to where that exists. The audit committee's focus is around the reporting of the the strategy, but to the extent in relation to the compliance with regulations. And obviously a lot of work being done around the CSRD regulations and the disclosures required, the processes and controls required to enable the appropriate disclosures to be made. And I think secondly, the whole area of the risk assessment has been a key area that we have taken input and discussed at the Sustainability Committee, but integrated into the governance of the Audit Committee. I think then, just very briefly, we've cascaded that governance through the organisation. So from an executive perspective, we have an Executive Sustainability Committee, and that's a cross-functional committee. The CEO sits on that committee, I sit on that committee, our COO, our CHRO, our Head of Sustainability, Elerina in her role, and various other subject matter experts around procurement, sourcing, etc., and the regional business. But we really had to think about how can we proportionately and appropriately integrate it into our management reporting. Maybe Elerina, you might add to it.
So I suppose if you're thinking about any kind of KPIs or measurement and metrics, the best way to kind of make sure that they're governed well is incorporating them into a management level governance. So what we've tried to do where practical is that we've integrated the sustainability metrics into our business performance cadence. So that helps in terms of understanding completeness, accuracy, relevance to the functions or to the regions. I suppose everyone has a role to play. If you're gathering the data, you're preparing the data, there's controls, there's review processes. So we've got reviews at either functional level or regional level or global level to ensure that it all comes together for group reporting. That cadence and that governance has evolved because, as Marguerite said, we had been reporting under GRI for a few years, so we've been evolving that, and it takes a while to get that rhythm going. You're educating your functions on certain areas that they wouldn't have had to be aware of before, particularly around the controls. So the partnership between a function and finance is much stronger now. And I suppose maybe if I was to think about some of the challenges in that is A, the education, but B, the systems enablement is an area that I think, it's a future opportunity for this area, whether it's the data gathering piece, the consolidation piece, for want of a better word, bringing it all together, and then the very end when you need to actually report it out. So, we're looking at all of those areas, and I know it's a topic on your discussion later today, but that has to be an opportunity for this space, because at the moment, a lot of organisations will find this is quite manual, so the governance is reflective of that as well,
Yeah, that's great, thank you. So I suppose most people are probably aware that double materiality is it's the first step, and everything will flow from that. So there's probably lots of companies out there who are coming in maybe in a year's time thinking about this and trying to get to grips with it. So could you talk us through a little bit about your double materiality process and how you dealt with stakeholders in the value chain?
So double materiality, it's quite an involved process. I suppose everyone's aware that it is there to try and assist organisations in determining what are the most important topics for them. And then in light of CSRD and ESRS, it then feeds into what are the most material topics for you to report on. Organisations will have done materiality assessments in the past, but they are quite different. This process is quite different. Maybe before we were looking at what was the impact, but you were never quite sure whether it was the impact on the organisation or the impact the organisation could have on the environment or on society. So now with the guidance through the ESRSs, you're thinking more deliberately about what is the inside-out impact. So what are you having as an impact on the environment and society, but also what can climate or society have as an impact on you, and thinking about as well the financial materiality of those impacts. So I suppose when we started out on this process, our sustainability team led out on this process, but clearly it has to be very cross-functional. I suppose everything to do with sustainability is very broad. It involves procurement, responsible sourcing, HR, operations, our commercial teams, our RD&A teams, and finance has a really key role in all of that. But due to the technicality of this new regulation and how to approach it, we did engage a third-party consultant to support us, guide us, direct us in terms of the design of the process and the making sure that when we were finished that we had all the requirements for the disclosures. I suppose we took it as an opportunity to actually engage with our stakeholders. So that helped us in terms of making sure that the completeness of everything we considered, but also gave us a sense in the value chain. So, we were speaking with our customers, our suppliers, investors, shareholders, and internally with employees and different people in different functions in the organization and in different regions. So I think that gave us a real kind of full breadth of it. I suppose one part of that, though, that we gave a lot of consideration as to who we were engaging in it. So it wasn't just a customer. We were trying to get someone in that organization that would understand sustainability and what impact we should be having. And so that, you're talking to knowledgeable people as opposed to people that might have just had a perception on it. So, from all of that, then we would have gathered all our information. We had a CSRD as part of our governance. We did set up a CSRD steerco last year that Marguerite leads up. And we would have engaged with them. We would have come at various stages through our process, had good input and challenge and debate on some of the outputs. And then from there, we would have presented this as a work in progress through the process. But at the end, we would have presented it to our Sustainability Committee. Again, good debate and challenge there to come up with the final list of material topics, which we then presented at the board. So it was a very involved process, but really some good, you always get some good insights and good learning through all of these processes, particularly if you're engaging with stakeholders.
Great, thanks, Elerina. So the next question is that it sounds like sustainability was already a fairly fundamental part of Kerry's strategy in any case, and there has been sustainability reporting around CSRDs, bringing it to a new level. So I suppose what do you see as the link between the reporting and the behaviour and strategy around it?
I think actually Elerina probably touched on a couple of points just in the articulation of the double materiality process. One of the things on governance and maybe the linkage between reporting and strategy, I think the skills you have around the table are really important. And certainly, Elerina gave it probably the 30-second overview. It was certainly a long process, and that was probably a key learning. But through the establishment of the double materiality, I think stakeholders internally and on our board really got a much greater understanding of the implications and what was envisaged, appreciating that this is very new and there is still a lot of interpretation. I think then just in terms of the linkage between strategy and reporting, we do truly think about sustainability as part of the business and a core part of the growth strategy. And so therefore, in integrating how we drive growth, how we improve the sustainable nutritional profile of products is as much a priority for our RD&A teams, our commercial teams, our sourcing procurement teams, our operations teams, and our finance teams, and the general governance that I referenced. That being said, I think it's fair to say, Elerina, that there is a difference, a significant step up envisaged by CSRD versus previous regulation. and that has necessitated a much more comprehensive standard approach across the organisation, which I guess from a positive perspective has probably increased, it has had a positive behavioural impact. That being said, I wouldn't underestimate for a moment the significant challenges. You know, if you think about, we have operations, you know, in Malaysia, Philippines, and we have operations in North America, the UK. When you're extending regulation right across different environments that have different maturity levels and different understanding in relation to what sustainability means, that can present challenges, notwithstanding that you've been pretty thoughtful around double materiality. So I think in terms of the linkage of strategy and reporting, you know, we have a phrase, and I didn't coin it, it's a Kerry, it's certainly a Kerryism, you know, what gets measured, is what gets done. We were always measuring our progress on our Beyond the Horizon strategy and target, which, as I referenced, dates back to 2020. What CSRD does is increases the scope of I guess, the areas of compliance, and necessitates much greater involvement cross-functionally. And also, you know, to Elerina's point in terms of quality of reporting and robustness, you know, that has elevated the focus across the organisation, I would say.
Thank you.
I think maybe just to add maybe one point to that as well is that I think that, you know, because there is such a thread from, you know, your strategy through policy into your action plans, targets and metrics, you know, while, you know, as we're living through preparing all of that, it's quite difficult. It will drive kind of a more future orientated view, and people will need to be more planful in their execution against their sustainability commitments. So again, you know, that will, you know, enable organisations, as Marguerite said, to, you know, drive more behaviour change, despite at the moment that it's quite a lot of work and quite challenging to get all of that, you know.
Yeah.
It's a really good point. I mean, one of the areas that we've spent a significant level of time discussing and evaluating is the impact of climate risk on investment decisions. So when we look at our manufacturing footprint, you know, I think it's fair to say, you know, from a finance or a planning perspective, normally your horizon is 12 months, maybe 5 years, if it's a 5-year strat plan. What this is requiring you to do, as Elerina referenced, is take a much greater time frame. So yesterday, you know, at our audit committee and our sustainability committees, we were discussing climate impact in 2030 and 2050. You just can't have the same level of specificity or detail when you're speaking, you know, that long range in terms of, you know, the impact of climate risk. That being said, we are incorporating those discussions in our evaluation of, I guess, capital allocation and investment. It can feel somewhat theoretical at times to our operations and engineering and planning teams, and it's trying to get the right balance proportionately around that, and then also meet our requirements in relation to kind of that forward focus, Elerina, that you reference. And, you know, that has been a change, and that's certainly been an evolution for people. That's just one example.
Great, thank you. Yeah, I think weaving it in, you know, it kind of shines a light on things, and then allows companies to see things more clearly and then change if they feel that that's appropriate. So it's just coming up to 9:05, so we will open it up to questions now in a minute. But while people are thinking about their questions, maybe can I ask you, what would your top tip be for an audit committee chair or member who's facing this reporting? What should they ask their executive that you wouldn't like to be asked?
It's a very good question, Lisa. I'm imagining that the audit committee and the executives are working very closely together. So I think, look, maybe it's leaning in on some of what we said already. I'd probably call out governance. You know, that was something that we had a very good engagement and debate, particularly if you've got cross skills across the board coming from different environments, different backgrounds. Just listening to that perspective and being clear on the responsibilities between board, the individual committees and the audit committee, and then cascading that through the organisation. While it might feel what we outlined might feel very layered and comprehensive in the context of meeting the requirements of CSRD, it needs to be cross-functional. So I think that's a key point. I think the risk, really being thoughtful around where are the true risks from a sustainability perspective. You know, is it core and central? Is sustainability core and central to your business and your strategy? Or is sustainability your environmental responsibility? And that drives a different calibration. I think readiness, I mean, we did do a readiness assessment, notwithstanding we had been reporting for several years on various different regulations. And, you know, we were not ready 12, 18 months ago. I'm not saying we still have a lot of work to do to get to the finish line, but that readiness assessment and, you know, embracing the fact that there are certain areas, this is new regulation, so you're not going to be compliant until you do the additional, you bring into scope the additional areas. Probably the last comment that I would call out is this is new. It requires people to upskill. It requires people to learn the new language. I think Elerina, your team has put together acronyms and learning materials. We've also really leveraged our digital and learning platforms, you know, with driving out sustainability essentials, driving out the next level of sustainability training, and getting the right level of engagement across cross-functional teams like commercial teams and procurement teams and RD&A teams is important. And I probably wouldn't underestimate the level of time this takes, both from an audit committee perspective, but also from an executive perspective. My last word on it is proportionality. It's trying to find the right balance. So, you know, doing the right thing from a planet and sustainability perspective, while also meeting the regulatory requirements and making sure that, that you get the right balance from a corporate executive perspective and board perspective, that you're driving the right sustainability impact and also spending time on the reporting side. It can be difficult to get that balance right.
Yeah, it's a lot to add on. Do we have any questions in the room? Okay, so I have one online. Sorry. Can we get a mic here, please? While the mic is coming over, I'll ask you a quick one maybe, which is just whether the reporting is going to impact, I suppose, your normal reporting timelines. Will there be additional time to allow for this added reporting that's coming in?
So coincidentally, we had additional time for this year end, just the way the calendar fell. So we did have a few extra days for our audit committee to review our sustainability report. As I said, we'd been reporting under GRI in the past, so I've reminded them that they've had a 70-page report to review before. This will be a bit longer and a bit more technical and detailed, but I suppose the key is trying to get a lot of work done pre-Christmas with your assurance partner to make sure that you've gone through, particularly when you think about the qualitative information, the data testing, etc. So and then the disclosure requirements, which we're kind of working through at the moment as to how we meet all of those requirements and how we bring it all together in a digestible way. So that it is still readable at the end of the day by all our stakeholders.
Yeah, great. Thanks, Elerina. Go ahead.
Thank you. You mentioned the importance of data but also the kind of extraterritoriality impact of these regulations, particularly. So if you're looking at customers and suppliers that are in areas of the world that are either not equipped or hostile or disinterested in participating in the type of data accumulation exercises that are necessary for this. How are you handling that? Is this a challenge?
Elerina, maybe do you want to outline the procurement, how we're thinking about the suppliers?
I will. So I suppose if you think about, if I go to the supplier end and the engagement that we need and the reporting we need to do, that we need to connect in with our suppliers. So first, if you think about Scope 3 and the carbon footprint of the raw materials. So we are relying on secondary data for a lot of our Scope 3. We are fortunate that we have a really good relationship with farmers in the southwest of Ireland, so we can actually get that primary data directly from them. But for a lot of our Scope 3, if you think about our footprint, as Marguerite said, it's global, it's all the way back to farm level. We're dealing with processors between the farm and ourselves. So we're using secondary data that you use emission factors, etc., and bringing that together. And that will evolve. You know, we are working with them and partnering with them to see how are they gathering that information. So that will evolve, and we will have to transition as that evolves. If you think about, you know, within your value chain in terms of, we'd say, human rights, it's around, first of all, I suppose, we have done a risk assessment on our suppliers and on where we source our raw materials. We look at the ones that are deemed at most risk. We look to have them be part of a platform called SEDEX, so then that they have to self-report on that. And then it's around due diligence on what comes out of that platform, and that if there's audits done in relation to that. So then what's our due diligence process on that? We would engage with our suppliers. So during 2023 and again in 2024, we actually run fora whereby we try and do some training on what that platform, how to complete on that platform. And it is all about engagement. But we have a really, really broad set of suppliers. Various, you know, some of them are multinationals which understand this and have their own requirements, and some of them are much smaller. So it is a journey that we have to go on and evolve.
And I think maybe just one final comment on the customer side. You know, for many of the CPGs, excuse me, and the larger customers, they also have their sustainability targets. And so we integrate, I guess, our growth plans with the customers in terms of trying to reduce their carbon footprint. I would say that the Scope 3 on suppliers is certainly the area that is more challenging and more evolved. And that's not just for Kerry, that's right across the food industry.
Great, thank you both. We do have some more questions, but unfortunately we're over time. We could probably stay all day chatting, but I know I need to let Marguerite head off to another meeting. So thank you both so much for joining me.
Thank you very much,
Thanks,
everybody.